Governments love to tell you they're working for your financial freedom. They speak of stability, growth, and opportunity. But if you look closely at history, a much darker story emerges. Governments have always employed hidden financial maneuvers to keep ordinary people struggling, while concentrating wealth and power at the top. And the shocking truth? These tactics aren't new. They've been recycled for centuries, dressed in new packaging, given fancy names, yet always with the same goal: transfer wealth upward and keep the majority dependent. Let's start with the oldest and simplest trick of all: inflation. When a government spends more than it collects in taxes, it has two choices. It can admit the truth and levy higher taxes openly, which is politically risky, or it can quietly devalue the currency, diminishing the worth of every coin and note in circulation. Ancient Rome perfected this tactic. In the 3rd century, emperors facing massive military expenses gradually reduced the silver content of the denarius. A coin that was once nearly pure silver became mostly copper, with just a thin wash of silver on top. The empire acted as if nothing had changed, but the public paid the price. Savings vanished, wages lagged, and inflation soared. It was a silent tax on the people, a trick still in play today, now wielded by central banks instead of imperial mints. The Middle Ages introduced another variation: forced loans. Monarchs in England, France, and Spain regularly pressured wealthy merchants and guilds to lend money to the crown. Refusal meant fines, confiscation, or worse. Repayment was often late, in devalued currency, or never at all. Meanwhile, the crown maintained wars and palaces, leaving merchants with little choice but to surrender their capital. Coercion was disguised as patriotism or duty, and it worked centuries on end. By the 17th century, the financial system itself became the trick. When Britain founded the Bank of England in 1694, it wasn't out of generosity. It was because the government needed money to fight France. Wealthy investors bought government bonds, earning guaranteed interest funded by taxes. Who paid those taxes? Ordinary citizens, through duties on everyday items like salt, beer, and cloth. The wealthy profited safely, while the poor funded their gains. This wealth transfer system was dressed up as national finance, establishing a pattern that persists today. The safest investments are those lending money to governments, secure by the labor and spending of the masses. Fast forward to modern times, and the tricks are everywhere. Deficit spending, for example. Governments rack up massive debts, issuing bonds bought by investors, banks, and foreign powers. Politicians promise infrastructure, jobs, or social programs, but much of it funnels to defense contractors, corporate subsidies, and bailouts. When repayment comes, governments don't cut their own spending. They raise taxes, inflate the currency, or slash social benefits. The illusion is that the debt serves the public. The reality is that ordinary people shoulder the burden while bondholders profit. Bailouts offer another lesson. During the 2008 financial crisis, reckless banks bundled toxic mortgages into securities and nearly toppled the global economy. Who paid? Ordinary taxpayers through massive government bailouts. Who benefited? The same banks, now bigger and more powerful than before. Privatize the gains, socialize the losses. That's the formula. And it continues today. Inflation eats savings. Debt loads climb. Bailouts remain the reflex. Central banks manipulate the money supply, while costs trickle down to the public in indirect ways. The system is designed to keep you working harder for less real wealth, while the financial elite grows stronger. The lesson? These tricks always return. Rome debased coins. Merchants lost fortunes under forced loans. Households bore the burden of modern debt and inflation. Different centuries, same mechanism. And the harsh reality: most people never see it coming, believing inflation is natural, taxes are inevitable, and bailouts are acts of mercy. Financial education is resistance. Economic history is a weapon. Know the tricks, and you are harder to manipulate. Takeaway: look beyond the headlines. Who truly profits from stimulus, inflation, or regulations? Build wealth outside the system. assets that hold value when currency doesn't. Never assume the system exists to protect you. It exists to protect itself. The financial tricks that drained Roman citizens are the same ones emptying your bank account today, only in modern disguise. The only difference is whether you recognize them in time. Even pensions and retirement systems are sleight-of-hand schemes. Citizens pay into government-managed systems for decades, trusting their money will be there upon retirement. But governments often spend it immediately, leaving only IOUs. Future taxpayers are expected to cover the cost. It's essentially a generational Ponzi scheme, disguised as official policy. Benefits are later reduced, retirement ages increased, or payouts eroded by inflation. Notice the pattern. At every stage, perception is everything. Inflation is called growth. Forced loans become duty. National debt is investment. Bailouts are stability. Pension cuts are reform. The language masks the reality, a transfer of wealth from the many to the few. And history shows this works, because most people neither study economic history nor understand financial systems until it's too late. Recent decades have only refined these tricks. Quantitative easing, a term few heard before 2008, allowed central banks to create trillions of dollars, buying government bonds and mortgage-backed securities to stabilize markets. Asset prices soared, stocks, real estate, bonds, but the wealthiest reaped most of the rewards, while ordinary households faced rising costs. Inflation and inequality widened, yet the system remained stable for those at the top. Governments also rely on stealth taxation. Sales taxes, fuel duties, inflation. Costs rise faster than wages, silently eroding savings and purchasing power. Complexity is another weapon. Convoluted tax codes, obscure financial instruments, and jargon-laden budgets make it impossible for ordinary citizens to track money flow. When the public cannot see the transfer of wealth, resistance becomes impossible.